You know, I think it has changed things, and not so much the statement specifically, some of the kind of moonwalking that's being done by Fed officials, Rosengren in particular, of course, moderating how many hikes he think we'll see. But the issue isn't so much the static interpretation of what they say and holding them to it, which is always the standard. I think the new standard, the feedback loop that's got to exist and be refined between the markets, the economy, and the central bank is an ongoing work in progress. And I think many see progress in that regard. I just think that, you know, Fed officials need to be cautious not to run away too much from kind of what they think of as the master plan. I think balance sheet reduction is a good thing. The fact that they're now saying that maybe, they could stop it, I get it, but they have to quit being trapped by their own words. Once again, I'll say it. They are the guardians. The market and the investors in aggregate are real childlike in how they behave. Markets move based on emotions, just like children. And I think there's an adjustment period. And I think that's a good thing from kind of the more bureaucratic, we're data dependent. But everybody knew that the plan was more important than the data. That's changing.
I think it comes down to, Lindsey, what the economy is doing and what corporations are doing. We're on the brink of a new earnings season. What are you expecting? There have been some very mixed signals, including, Constellation Brands today.
Yeah, I think some of the names that we've heard from already, there's been a handful, about 20 names. Look, the fourth quarter is good. It's all about guidance, and we've seen huge cuts to 2019 outlooks. And I think you're going to get more of that as the earnings season unfolds. And because of that, I think that's going to
From where specifically?
I think industrials and financials. I know the financial numbers have come down in the last week or so for the fourth quarter, but they haven't moved much for either sector for 2019. And that's where my concern really is. If you think about all that we heard about China and the slowdown that we're getting there, you're going to see some of these industrial numbers cut.
That's interesting. Clearly the market has stabilized a bit in the last week or so. Do these downgrades to come lead to another big pullback, or the pullback we saw at the back end of last year mean that the market can take a couple of these downgrades?
I think the individual stocks are certainly going to be negatively impacted. Look at Constellation Brands today, down double digits. It especially is going to hurt these higher quality names that you're going to get the cuts from. But I think after the earnings period is over, usually the market does pretty well in the month following. But it's going to depend on really the extent and the breadth of these cuts.
Do you get the feeling that some CEOs of companies are trying to use the trade battle as an excuse to get away with some downgrades, or is this the fundamental cause for the weakness that they might be seeing?
Yeah, I think it's a little bit of both. You're seeing economic data in China really slow down auto sales, retail sales, industrial production is contracting over there. That's going to really impact some of these companies. And so I don't think it's as much as an excuse as a reality. And there's a lot of uncertainty because of trade, which, getting to Michelle Meyer's point, it makes it hard to plan. So the first quarter is going to be really uncertain.